Good morning, traders. Thanks for joining me today on this Tuesday, the 9th of March, 2021. This is episode number 1952. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as we pop right over to our pre-market summary sheet, from Convergent Trading, we see that we have a slight risk on sentiment, or a pretty strong risk on sentiment, actually. Currently, the market has been in a stair-step type of rally in the indices. We see that my bond chart is messed up, that's for sure. We see equity flows, or money flows into the equities, gold and silver. Gold is getting a pretty strong pop this morning. Silver as well. Gold is up 2%, currently up $34.70, trading at $17.1270. Silver is trading at $25.93.5, up 66.5 cents or 2.7%. The leader today is the NASDAQ, up 310 points. Big day for the NQ. That represents 2.5%, so greater than 2% day from the prior day settlement. The Russell's up pretty strong. Again, as it indicates over here, the overnight posture is quite bullish, risk on. So that's where we stand. Currently, the S&P has traded 325,000 contracts. Something interesting here. Yeah, 325,000 contracts. Sorry, let me clear my... And, wow, my throat's just really dry. Sorry about that. So what's on deck today? There's quite a bit. Bond yields remain front and center here. And overall, we're seeing really important shifts in what the market is perceiving as far as what's driving things. The overnight inventory so far is 94% long, with 39 and a quarter points of range on a multi-distribution profile. Again, we are just taking back all the selling that has taken place yesterday, both across the board so far. So expecting it to be a pretty busy day. The market is still, the volatility is still high enough that we are likely to get some really good opportunities to win. And of course, with opportunities to win, there's also more risk. So bond yields, U.S. stimulus still in play, and equity stocks still, Robinhood, all that stuff is still coming back into action. And that's where we stand. Let's take a look at what was expected yesterday. Yesterday, the primary scenario was a pullback, was looking for a pullback into the 38.28, 38.30 area in the S&P, and then I was looking for it to run into 72 and then eventually 80. 80 is that next big area up top to check. Scenario one was on point yesterday, but it happened very, very quickly. Here's what actually happened. This is on a 4-tick Renko. Again, I need to clear my throat. On a 4-tick Renko here, we open up, we pull back to where? To 38.29.5. Remember, scenario one, let's go back to that. Scenario one was looking for a pullback to 38.30 with a push to 80. as outlined here, and it was pretty much on point. So we pull back to 38.29.5. We immediately have a 27-point run, a 27-point run from 29.5 to 62.25. We pull back pretty deep, and then we continue, and then we ultimately finish where we're expecting at 38.80. At that point, the market goes into a selling frenzy. We have a very large, look at this rotation down here, 26 points, 26-point rotation down with a strong continuation at this point. When you see 26-point rotation down, you're pretty much off of the longs and looking for that short. And the short area, of course, as I discussed in yesterday's Trader Bite, the short areas will favor these boxes. These zippers become key to defining risk and reward. So that's basically, we have a bit of a, I felt like we had a bit of a, look, I'm sure people are losing money in this market. There are always winning days and losing days. But this is, in my opinion, this is about as good as it gets in terms of opportunity. So if you're gun shy, or if you're waiting for too much information, if you're taking a lot of price risk, if you don't have a refined plan, or you're trying to figure out your plan, this is what you prepare for, where the volatility is just big enough that you get these big rotations, big impulses, wide ranges, but not so big like we saw in March and April of last year, where trading a one lot presents too much risk given the account size. So my point being, if you're trading for me, if you're one of my prop traders, I'm going to tell you to push the gas here. Again, this is trading futures is not suitable for all investors, but there are no excuses here in terms of being able to read the market. This is like a market that is running at 4 times speed in terms of how it's playing trades out. You find out very quickly if your trade is going to work or not. But rotations have expanded. Stops have to expand, size has to drop, or you need to fund more to keep the percent of account that you're risking per trade at a reasonable level. And then as you increase your stop size and reduce your quantity, your target should also expand so you can maintain an R factor. It's kind of a formula. But I just want to make sure you understand that this is as good as it gets, really. This is a type of market where there needs to be engagement. This is where your plan and your edge and all the work you've done for your edge is likely to play out or not. So if you're having a hard time finding opportunities in this market, you might want to look inwards and figure out what the story is, what is keeping you. One of the things I want to point out, other than these boxes, these zipper boxes here, the other thing is, as we were climbing up, I had pointed out in the Convergent Trading Head Trader channel that the delta does not look good to me. I pointed out that as the market was pushing up, let me clear this, as the market was pushing up yesterday, it was moving on thin air. Look at the delta, this pane right here. This is the delta, cumulative volume delta, very important. As the market is pushing up, this rotation right here, this 27-point rotation did not garner much in terms of delta participation. And I had warned about this, that this rally looks a lot more like the offers pulling and size lifting, very small size lifting for the next price. Like if offers pull and there's a vacuum and a one lot trades, price will move quite a distance, 2-3 ticks, but it did so on a one lot. So the delta is only increasing by one contract, but price may have increased by 5-6 ticks. And so if that's the case, then this is not aggressor volume. In other words, price is not being lifted. The hard work is not being done to lift the market, and this is tricky. So as we move into this long, big impulse, which I outlined in which I outlined right here. That's this impulse right here. I was looking for this. As we push into this impulse of 27.75 points, we were only able to muster up about 5,000 contracts of buying, aggressor buying. And so as we peak out here, you notice that the delta drops off quite dramatically and stays low. So as I move forward, in my mind, and this is what I pointed out in the Head Trader channel, the delta participation is very poor here. We're at 76. The delta is crashing down. It's just bailing. It's really bailing. And as it makes that high at 78.75, this was the high of day, by the way. Weak high left behind yesterday at the 38.80 target. Okay, so it was 78.75. We missed it by 5 ticks. Big deal. But overall, look at this delta just colliding, dropping down. And this to me looks quite unhealthy in terms of how the rally was moving. And these sorts of things, I can't act on the fact that the market is rallying, and the delta is not moving up. That's in and of itself is not a setup. Like, I don't do delta divergences. There needs to be another factor that I'm using the delta divergence for, and the delta is not the same throughout the day. But these sorts of things are really important to kind of detect. And as you see on the screen here, other than VWAP, which is a calculated figure, it's a volume weighted average price that starts at the beginning of the day. My charts don't have any lagging indicators. You see a bunch of lines there, but those are not moving averages or anything like that. Those are calculated lines based on current price action and current volume. And so I'm keeping abreast with what the auction is doing right now. The overall profile yesterday, very, very blunt, very active, relatively active auction. The volume pretty strong, 1.67 million, and the range is quite wide yesterday, carrying us into the overnight session. So we end up with a neutral down. The day before was a neutral extreme up, which I covered in the review yesterday of the prior session. And then yesterday we broke higher, then we finished lower. We ended up with a neutral normal day, not a neutral extreme day. The point of control remained at the top of the range at 72, while the market was trading at the low on the close. And so we opened back up, and here we are. This is a 30-minute bar chart, all sessions. And what we've done since then is we open right up, consolidate here in the Asian session, and then as the Europeans came in right in here, it's rally time. And we're staying ahead of full session VWAP, full session mid, and it's looking relatively strong, but it has stalled out. So even though we've rallied and overnight inventory is 95% long and all these wonderful things, the NASDAQ's just ripping shorts right now, up whatever, 2.5% or whatever it is. It still isn't all that great. It's stalling out in the 38.50 area. It's still holding this 38.50 area with a delta that is not so great. So I am suspicious, even though the one-time framing is looking like it's reversing on a daily to one-time frame up. In other words, the daily trend is shifting to an uptrend. It's not very strong. So as we look at what we're coming into today, don't get tricked by the little antics of the market where it seems positioned a certain way. Here's what's important. What's important is we're one-time framing down. We're still one time framing down on the weekly. We'll continue to do so until 39.12. And then what happened day before yesterday on Friday, what happened is we breached the lower high, and we're starting to reverse, and we put in a higher low. And yesterday put in a higher low and a higher high. So yesterday triggered one time framing up on the daily. We're still one time framing down on the weekly. We did not check 36.94, which is this big balance area right here, and we're moving back, and it's had a hard time closing above 38.80. It's definitely had a hard time closing above 3900. It pokes through 3900 and comes right back off. And so to me, we're in this area right here on the composite. Probably yellow is not a great color here. We're in this area of acceptance right here. We're really building back and forth. So as I shift this profile forward and encompass these last couple of days, look at what happens to the middle. It's filling in. It's filling in the middle, and it's battling it out. Now 37.94 is the MC point of control. We tested the heck out of that Thursday and Friday, and again, we were not able to hold below. So the market is volatile, but it's bracketed. It is bracketing. It is rejecting prices that are higher. It is rejecting prices that are lower. And so what it's likely to do is bring both sides in to position themselves. The other thing to note is we are getting an uplift in delta overall. Yesterday didn't perform very well, but overall the delta on the daily is starting to turn a little bit up. And to me, it seems like we're likely to get into a compression here. We're likely to consolidate now that the stimulus package is on the way. The market's forward-looking mechanism, the stimulus package is on the way. Yields are coming off a little bit. Now we have an incentive for buyers to step back in, but we also have incentives for sellers to be engaged. So what this is going to do is create the type of market we had yesterday, where we have these huge impulses in one direction and then impulses in the opposite direction. So what we've been doing is we've been going in one direction in the morning and going the opposite direction in the afternoon, then taking it back the next day. So there's a lot going on here for day traders. This is a day traders regime right now, market regime. Be sure that you are sharp. Be sure that you understand your risk and that you're planning properly to trade it. So let's take a look at what's expected for today. This, of course, brought to you by EdgeClear, the futures brokerage that I started a year ago with a fantastic team. If you have not checked out EdgeClear, I invite you to do so. It's a shameless plug, but it is there, and I'd like to see it grow because there's a lot planned for you guys. All right, here's what we're looking at. So let's turn on the stock zones. Let's turn on the master levels. This morning, what are we expecting? The primary scenario, we're opening right in, and we're being entangled in this 62 area, also the overnight point of control. Expecting it to be a relatively weepy morning. I'm looking for inventory to balance. I'm looking for it to drop into the 38.50 again. If the 38.50 holds, we are likely to punch through and get the overnight stat at 65.50, and we are likely to push that week high at the 80 to squeeze higher into 38.94 or 98 above there. So that brings us into this balance area up here. This is 98. Okay, so this is another day where we're likely to push higher because I don't have anything that says that it's not. So I have to go with what the market says versus what I'm expecting, like I like an urge to fade or whatever. The secondary scenario is it opens, it squeezes higher right away, takes out the overnight stat, takes out the 38.72 overnight prior point of control or balance area, and then consolidates in there, rolls over, creates an impulse to the downside, pushes through the overnight point of control, and then starts pulling back to yesterday's close. Yesterday's close is 26.50, and then here we are again visiting the 38.30 and potentially lower. This is scenario 2, balance out at the end of the day. We're not opening in a gap, we're opening in range, we're opening in yesterday's value, and we are underneath the point of control, above full session mid, full session VWAP, underneath the overnight point of control. There's so many pieces above and below us. There's a lot. Look at those stock zones stacked on top of each other. The gray bands, those are my reaction areas that we share with convergent traders. There's just a lot going on above and below. I mean, we've been through this so many times. Look at the levels below us: 50, 30, 20, 3809, 3800, 3794 is major, 3764, 3760. And then above us, we have 63, we have 63, we have the 80, we have a weak high from yesterday at 80. I expect that to be taken out, hence scenario 1. We have 98 above that, the 3900, 3909, which is the big balance area above, 3912, which is the weekly high. You got to memorize these numbers. You have to follow the story enough that you don't need to kind of write these down. You just know them. And then you're paying attention to how the market reacts in those areas and take the trade when it looks like it's weakening as it approaches that area. So fade the area on a first touch, on a virgin test. I'll let you go. We have 3 minutes or so to the open. Hopefully you gained something from this today. Make sure you have a plan. Make sure you're engaged and focused with the market. This is not a time to be distracted if you're a day trader. Good luck, and I'll catch you tomorrow morning. Maybe I'll be in the office. I think I'll be in the office. So you'll see me again. Take care.